Welcome to the Building and Growing podcast. We're delighted to have Mike and Adrian here today from AbbeyCross. Welcome, gentlemen.
Thanks, Lucas.
Yeah, Lucas, great to be here. Thanks.
You're most welcome. It's a very exciting topic that we've got today. I'm going to let the two of you introduce AbbeyCross and how you're disrupting the FX market shortly. But why don't we start off with some introductions? I'll kick off with Mike just because you're closer to me here. Mike, tell us about yourself.
Thanks, Lucas. Yeah, Mike. Wow, where do you start with these things? I mean, I'm certainly one of the older dogs in Fintech, I think, as founders go. Background really foreign exchange and payments,
Yes.
in banking specifically, for, it's 20 years now, right? At least that. Began my banking career in 2003 out of business school. It was my third career. I'd done marketing and some technology stuff before that. But yeah, grew up in South Africa, moved to the UK in the mid-90s.
Yes.
Relocated to New York in 2018 with Bank of America. I was running the cross-border payments business in the FX side for them for almost 10 years.
Nice.
And they moved me to New York in 2018. I was spending so much time there anyway. So really, that's my background, FX payments and banking.
Fantastic. Thanks, Mike. Yeah. And, you've partnered up with Adrian to found the business. Adrian, tell us about yourself and, feel free to include how you guys cross paths.
Well, I will. I started my career as a lawyer and I worked in commercial IT, IP type law, so all transactional stuff.
Yep.
And like a lot of lawyers, I wanted to get out of that.
How come? Why did you decide to leave?
Well, the interesting thing about practicing law, particularly transactional stuff, is that it's a very secondary function.
Yeah.
So you spend your time helping other people do business, and most lawyers have inquiring minds and are interested in the subject matters of their clients' businesses, and eventually get the feeling that they'd like to be doing the primary thing, which is actually doing business, not just supporting someone else to do business. So, that was certainly my experience, and I jumped the fence.
Nice.
I was sort of working all the hours God sent, and I didn't have much time to look for a job, and I got a call from a recruiter about a role at RBS.
Yes.
And, had a 40-minute coffee with him, and I was at RBS in an in-house role with the sort of hope that I'd get the chance to jump the fence.
Yeah.
By chance, the business that I was supporting was Mike's business at RBS, which was called FX Micropay, which was a platform that provided FX pricing and risk management to the payments business and the trade finance business of the bank, so facing the transaction banking business.
Sure.
And I supported them for about a year and a half before Mike offered me a job in the front office, and I kind of bit his hand off and said goodbye to the law and joined them. Mike then moved on pretty promptly. In fact, before I even arrived, Mike had left. But then, I ended up becoming, over a few years, becoming head of product for that business and transactional FX generally at RBS. And it was fantastic to just learn all about another business. I didn't choose it, but I've sort of really enjoyed it. And where Mike and I both worked there and in subsequent banks is on the fault line between markets and transaction banking. And if you know how banks work, that's a sort of fairly crunchy sort of fault line within the bank, and kind of a highly politicized and at times difficult relationship. But that's because banks have these two major divisions that were never designed to work together, but need to serve clients. And so it's a fascinating place to work, and it's where this problem that we're trying to solve now with AbbeyCross kind of first came to our attention. I then went on to work at the French bank, BNP Paribas, and do a little bit of work across Fintech before we founded the business together.
Fantastic. That's great. So look, strong backgrounds in banking and FX. And for those listeners or people viewing the podcast that might not be familiar with FX and transactional FX, do you mind sort of maybe giving a quick overview of what FX is?
It's funny you put it like that, because when we were putting together our first pitch deck, we spent a lot of time just on that particular phrase. Do we call this Forex? Do we call it foreign exchange? Is it FX? Who's the audience? Will they understand it? And it's a little bit like the curse of knowledge. When you know that there's different facets to something, you think you should over-explain it, and we'll get back to that. But FX, do you want to have a go?
Well, foreign exchange is it obviously involves the exchange of currency, and I think the only thing everyone sort of intuitively understands what foreign exchange is. I think what is less intuitive is that in every foreign exchange transaction you're selling a currency and you're buying a currency. So it's that's the part of FX that's not so intuitive, but I think everyone basically understands what FX is: swapping one currency for another.
Yes.
There's a lot of derivatives that flow off that, a lot of different ways of managing FX exposure, but you're basically buying and selling currency.
But I think it's worth saying that there is this, and we discovered this in explaining this to the VC audience. You know, I will say one of the amazing things about the VC community is the breadth of knowledge across so many factors. But I would say there aren't that many that have very deep knowledge in any one particular vertical. Unless they've invested extensively in that particular area, they don't really have that. And we discovered that in trying to explain to the VC community that there's a very big difference between the FX for a payment and the FX for institutional or alpha-seeking trading.
Yes.
If the FX market is the biggest in the world, $6-7 trillion a day, the vast majority of that has got nothing to do with the kind of FX or Forex that you and I would come across on the street. It's a totally different world. So we are very focused on the FX piece that specifically relates to a payment.
Yes.
And physically is settled as a payment. Either as the amount of money being sent to the final recipient, the beneficiary, if you will, has to be delivered to their account. That's settled physically as a payment. So there is a difference, because some of the FX that you see traded in the marketplace has nothing to do with being settled to an account. It's effectively a trade, an NDF, if you like. It's traded in and out of a currency sometimes in minutes. And it's in the form of a swap a lot of the time. It's not even an FX trade, so to speak. So there's some nuance to this, and invariably it's worth understanding. I think that what we're into is specifically FX for payments.
Great. So just to really set the scene, we're talking about FX for payments, and I suppose predominantly, very high value transactions as opposed to
exactly the opposite.
Volume.
Exactly the opposite. It's high volume, low value.
Okay.
It's exactly the opposite way around. The institutional market is exactly the flip side.
Yes.
Massive size trades, but not that many of them, relatively speaking. So the volume exists, but in bigger trades. In payments, if I'm imagine Apple paying their staff around the world. If they have, those aren't huge payments, but every individual one is its own trade.
Yes. All right, got you. So I guess, for small day-to-day payments, we've got, sort of providers like Revolut, TransferWise and that. And then, for, let's say, companies who are making large amounts of payments, maybe payroll, maybe buying suppliers, that's the area of the market you guys are focused on.
Yeah, I think that's right. And the people that we're looking to support, we're in the wholesale market, so we're looking to support and enable banks, other payment companies, and NGOs really to make payments more effectively into the emerging markets. So banks are making payments for retail clients as well. So it's the full gamut.
Excellent. All righty. Well, look, let's dive into AbbeyCross, because we've kind of set the scene there, very well in terms of who you're focused on. So tell us what AbbeyCross is.
So AbbeyCross is a brand new infrastructure. If you like, it's a marketplace for emerging market payments specifically. So we're solving the problem that we've seen exist. Adrian alluded to it before. We came across it for the first time when we were both at RBS in emerging markets. The way that banks have, for the last 20 plus years, managed the emerging market payment value chain, if you like.
Yes.
And in essence, what AbbeyCross is an infrastructure that we are building to enable that wholesale area to be managed more effectively, or optimized, if you will. And frankly, it's probably worth explaining the problem, because then you will see what we're about.
Sure.
Every fintech probably that gets funded out there is generally funded on the narrative that banks underserve and overcharge. Arguably. And they go ahead, you mentioned Revolut, Square, Stripe, Wise. They get funded and they build incredible businesses by in essence, building a utility layer, which serves their end user group, but really is sitting on the top of banking rails. Because at some point when you're making a payment, invariably the world of payments is driven through the banking ecosystem, the correspondent banking, Swift messages, and what have you. So if you aren't solving for the fundamental layer, the foundational layer, you really aren't solving the ultimate problem. Now, if you step back from that and say, well, what is the problem? At a bank, you could divide the world of currencies into two main groups. There's the more liquid currencies, G10, some G20, that banks in essence manage through the normal trading convention. There's lots of bids and offers, transparency in pricing. And so they're able to price that particular trade effectively and with the right sort of reporting. And then they, more importantly, settle that transaction generally through their own branch network. So it's a segment which is efficient. Most of the volume in trades is there, and most of the value is created there, if you like, the profit. But then there's another segment of currencies, and it depends on the bank you're dealing with. But let's say it's somewhere between 70 and 100 currencies, which is collectively referred to as EM, emerging markets. And it's not one currency, it's a group of currencies. And that particular segment is very inefficient within large banks. And for the last 20 years, in essence, banks have needed to serve customers with those currencies. So what they've done is they've outsourced the management of those currencies to a vendor.
Yeah.
And the punchline here is that 8 out of 10 banks have used one vendor and one vendor only.
Okay.
Okay, so you can already see where this is going, right?
Yeah.
So this is the problem. And in essence, because of this, they've created this, through an accident of history almost, a situation where you can't have effective competition in that particular segment. Worse, you also can't report to the regulator that you are pricing accurately, because you get one price from one vendor. Now, who do you compare it to? Because the marketplace convention for comparison is generally a third-party data point, Bloomberg Refinitiv. There isn't a data point that corresponds to an FX trade plus a settlement cost from a single vendor in a market you can't even see, probably.
Yes.
So there's this really odd thing that's happening there. And in understanding this, we've recognized that there's no real bank-led solution that can solve this. The incumbent has no desire to change it. Why would they?
Yeah.
And I'm not arguing about that. I would do the same if I was them. So frankly, that's what the problem is. AbbeyCross is, in essence, an infrastructure that allows all the participants in that marketplace. Adrian mentioned, payment companies, NGOs. Of course, banks are both banks and payment companies. They all can integrate once into the platform. And then any vendor, some of whom are banks, serving those banks or those payment companies can integrate as well. So now you have a complete marketplace where you've removed the problem of bilateral contracting and bilateral integration, and you created a perfect, transparent version of what the market should look like. And those efficiencies alone drive down wholesale cost. They give you the data you need to manage your regulator relationship and so on. But that's the essence of what we are, would you say?
Yeah, absolutely.
Yeah.
I'm going to try and simplify it. So, you've got banks who in the past, when they need to trade an emerging markets currency, which, there might not be very many trades of, they go to a supplier, they look for a quote, but that quote might not necessarily be efficiently priced, let's say, relative to what they're seeing on Bloomberg or Refinitiv. Am I on track so far?
You are, but there's a nuance.
Yeah, I think probably the important thing to understand about it is why they're only going to one.
Yes.
And that is just a function of how banks work and how they trade.
Yeah.
For a bank to trade with a provider of this service, they've got to onboard that provider.
Yes.
And that's the work of 9 to 18 months, from technical IT security right through to credit and a whole range of other committees that have to be have to be dealt with.
Yeah.
That is a long process. That, by definition, is an expensive process for a bank. And even if they have the resource, even if they have the budget to do it, getting it up the dev stack and dealing with all the other internal challenges exists. So a bank's now integrated with one provider that they've onboarded and that they therefore have permission from within the bank to actually trade with. So they're actually in a position where the kind of key point here is that they can't just chop and change without going through that 18-month process with a second vendor. Even then, they don't have prices in competition. They've just got separate prices. They're not looking at those prices the way FX traders historically would look at a market.
Yes. Okay. Fantastic. And so, if I drill down then into your proposition, it is you want to onboard with the banks and then be able to provide pricing from different
think of it like competition. Adrian touched on a point there. The traditional FX trading market is a marketplace where people trade currencies based on price. Yeah. This price is different to that price. I'll take the best price. It's a very straightforward process. This portion of the FX market, the EM section for payments, has never been that.
Yes.
It's always been a bilateral one price, take it or leave it, which is totally contrary to what banks typically do. But they've arrived at that place almost through an accident of history. It hasn't been some Machiavellian reason to make money. It's in essence just a way of serving customers when they never had the infrastructure before That's what's really happened.
Yeah, and so AbbeyCross is effectively creating this marketplace for emerging market currencies.
Yeah, absolutely. I think we like to say sort of integrate once. So from a bank's perspective, integrate once, see all, and trade with those that you choose to trade with.
Yeah.
So it solves both the problems that Mike's mentioned. One is just transparency, price transparency, understanding the market, knowing whether the price you're trading, and this is a regulatory obligation, by the way, on the banks, knowing whether the price you're trading at is fair and on market, because that's the price you're pushing out to your clients.
Yes.
They are retail clients as well as major corporates and other financial institutions. So being able to look at multiple prices, get some price transparency, that solves the problem.
Yeah.
And then, yes, being able to trade against the best price, or if not the best price, the vendor with a good price but the best service.
Yes.
And then the ability to take that price and defend it again when a regulator queries why you chose that price. So there are nuances to this thing. And all of those aspects that we're describing exist in the efficient segment of currencies I mentioned. They already exist there. They don't exist in the EM space.
Yes.
So banks are running this two-speed system, which is risky in itself.
Fantastic. All right. So I suppose the first problem that's being solved is currently banks aren't able for emerging market currencies to, provide different price quotes and say, look, this is fair. This is maybe a bit too high. This is low or a fair price. They're then not able to actually access, in many cases, any more than just one provider. And so, we've talked a couple of times now about, the pricing of the quotes. What spread, let's say, margin are you trying to tackle and provide to the banks? Do you have any estimates around that?
Oh yes, we've got a lot of data. But Adrian, I think this is the place where we can speak more here around how we look at what we provide and our approach to the market itself and what that does to spreads and eventually, isn't it?
Yeah. And probably the other key point to draw out here is that we're not a counterparty. So
what does that mean?
Yeah, so we don't sit between. We don't. A bank who uses our service doesn't trade with us, and then us back that trade out in a second trade into the market. That's not what we are. We are a pure marketplace. So we bring counterparties together to trade against each other on our venue. So we don't intermediate between those trades. And I think that's kind of key. So once you've got that sort of transparency, you can see the different prices that are available, not, as Mike said earlier, just a Bloomberg terminal that's showing a non-deliverable forward or some other non-relevant data point. Once you can see the prices, the real prices that are available in the market, and once you have some choice, then it's sort of it's a natural thing that kind of becomes a functioning and more efficient market, and therefore, at least in theory, drives the prices down. But emerging markets is a place, and perhaps Mike might talk about this a bit more, but is a place where historically the spreads have been enormous relative to the sort of wholesale, relative to G10 FX.
Yeah, enormous implies if you were sitting on a bank trading desk and you were trading cable, pound sterling for dollars, there the margins are fractions of a pip. A pip isn't even a basis point. It's just a function of how you would price a currency. So they're tiny. They literally are wafer thin, to go with that old line. But in essence, if you then contrast that with an emerging market price from one particular vendor, the general spreads start at 50 basis points. Which is as wide as Texas.
Yes. But
they go as high as 450, 500. They're incredibly wide. And when you say that to a professional FX trader running an FX business at an RBS, a Bank of America, Deutsche Bank, they don't believe you because it doesn't exist anymore in their world. But this exists because of this weird anomaly we described before in the EM space. So the margins are colossal, and we believe that there's probably a 30% bloat in these spreads, simply because of the market convention and the problems we described to you before. One price, take it or leave it. We believe that you just inject, as Adrian was saying, price transparency into this, you're going to reduce at least the market by probably 30 basis points, or 30%, should I say. And that's an important change, because that particular inefficiency impacts probably 6 billion people in the world. If you think about it from a purely altruistic human perspective, the inefficiency that wasn't designed by anybody still hurts us. And so this can change things. It can change people's lives, frankly.
Indeed.
I think there's a really important point here too. What Mike hasn't said is that this brings prices down to a fraction of a pip.
Yeah.
No.
It doesn't, because there are particularities about
That's true.
third-party deliverable payments anyway, where physical cash needs to be delivered to a beneficiary,
Yes.
whether it's G10 or an emerging market currency, but particularly the emerging market currencies that don't exist in ordinary wholesale FX trading. So, we're never going to bring prices down to there, because the incumbent vendor that Mike mentioned earlier provides a fantastic service. This is a good business that has served its clients very well for many, many years. The challenger providers, many of whom we're working with and are integrated to our platform, also provide an excellent service. And this service has to be paid for. It's not just simply the swapping of one currency for another. There's a whole lot that goes on in a deliverable payment, and that's why they will always be more expensive.
Yes.
But as Mike said, there's probably a 30% bloat in what they are.
And the thing is, we said this before, emerging market currencies isn't one thing, it's many things. And those anomalies that Adrian's referring to differ by country.
Yeah.
So the onshore jurisdictional aspects for every currency differ. In some countries, you need literally physical paper documentation before the payment can be delivered. It seems odd, but it exists. And so there is definitely underlying cost for this. That's not what we're here to solve.
Yes.
We understand that happens. What we're simply saying is that the providers of those services, in some cases aggregators of various, they will provide more than one currency offering, simply should be in competition.
Yeah.
Because competition is such a huge factor in how everything is driven here.
Yes.
That's all we're simply saying.
You both have done a fantastic job of defining the problem. Do you want to speak any more about the problem itself before we talk about how you built the solution?
I think we're good on that.
Well, the only thing I would want to add is not about the problem itself, but just the lens that we have committed to looking at the problem through.
Yes.
And that is that Mike has touched on this, but just I want to emphasize that we do not see this as the sort of malicious outcome of greedy banks. We don't, or payment companies for that matter. This is a non-functioning market, and there's plenty of good reasons why it's a non-functioning market. And there've probably been times when it was almost justified not to be a functioning market because of how big it was and how difficult it was.
Yes.
So we don't see that at all. We don't. This is not a story where the banks or the incumbent or the payment companies are the bad guys. This is a story where everyone's struggling with a situation they know they need to improve, and we've been delighted by the reaction we've had from the industry and how willing they are to work, not just for themselves, but for the beneficiaries, as Mike said, but for the whole ecosystem to improve this. That's really the lens that from day one we've been committed to sort of looking at this through.
Probably worth saying, we spent the best part of 12 months validating the issues we thought were real with literally our counterparts in some of the world's biggest banks in terms of payment banks. And there wasn't a single entity that said this wasn't an issue that should be solved. They all agreed it was a problem.
Yeah.
Where they were struggling with is, well, how do we solve this? Is this a bank consortium idea? If you know anything about those, they can be quite challenging. Or how does it actually happen? And clearly, if the incumbent is running a great business and making good cash out of this, why would they change it? Well, they're not going to.
Yeah.
So in essence, yes, it's not, as I said, it's not something where the participants have been trying to rip you off, so to speak. They've actually been fulfilling a service. But because the volumes in those particular currencies in aggregate were so small, and the problem in terms of solving it was so big, there was just never this middle piece.
Yes.
And that's changed. It's changed in the sense that the volumes have grown. And it's changed in that AbbeyCross now exists to solve for it.
Yeah.
Having seen that this need for an independent third party, an access layer, if you like, integration layer, a marketplace, an infrastructure, these are all things that exist in what we're doing, actually exists now. And frankly, the response to it has been astonishing.
Yeah, fantastic. I mean, it really sounds like you guys are working to optimize the ecosystem.
That's it, not disrupt it.
Yes.
We're here to optimize it, wouldn't you say?
Yeah, we actually go as far as to say we don't like the word disruption. It has all sorts of connotations around winners and losers for a start, which is not what we're trying to do here. But also it often reflects people who are entering a market they don't understand.
Yes. And,
are perhaps often just reinventing the wheel, but just less efficiently. It's a little bit different. But it's not disruptive in the sense that it's often made out to be. And we don't think we're disrupting anything. We think that we're taking the fundamentals of a market that isn't functioning as well as it could, and we are now enhancing that and turning it into a functioning market for the benefit of everybody. We don't feel we're disrupting anything. We're building.
And we're not, we're also not seduced or perhaps following an often media-driven message of, disrupt new tech, reinvent the wheel in a way that nobody's thought of before. A lot of the things we're doing exist already in the financial services market. They just haven't existed in this sector. And the technology we use, just logically, this should follow. There's no point inventing a technology or creating something in a tech which looks sexy on a PowerPoint or works well in a VC conversation, but a bank won't touch.
Yes.
It just makes no sense. And so, in essence, we're taking technologies that exist, we're taking the fundamentals that you refer to, and we're bringing them together in a more optimizable, if you like, platform.
Yeah.
And that's the essence of how you change this market. It doesn't have to be a cryptocurrency. It doesn't need to be a blockchain. It doesn't need to be some AI-driven algorithm that nobody ever thought of before. It's just the fundamentals. Get those right first. But once you've created this fundamental platform around which the industry is working, then all things are possible.
Yes.
Until this point, there has been no platform around which we could coalesce.
Yes.
Now that's changed. AbbeyCross is that platform.
Yeah.
You bring your players together and you say, right, what are the problems we solve collectively? Let's optimize for us all. Let's have this, get rid of the winner-loser argument here, and let's come up with something that actually makes us all better.
Indeed. Yeah, I think, focusing on optimizing through incrementals, can have a massive impact.
Hugely so.
It's fantastic. So, Mike, you referred to before about how, institutions have had issues, not, with execution per se, but there's been, lots of positive feedback about the idea, but lots of questions on how. So let's dive into the solution.
Yeah, I mean, look, I think between the two of us, the how, honestly, we have strong views and what we've done so far on how the how should work. And frankly, we're also discovering how the how should work.
Yeah.
And I think that's the beauty of this journey. Having left senior jobs at banks, understanding how banks function, which we can come back to, and then recognizing that if you're going to deliver a how solution at the fundamental base layer with banks, you have to create something which, as I said before, they can use, but more importantly, that they're able to step into. Banks don't sprint into anything hardly. So, you really have to be aware of that. And so the how, and Adrian, you certainly will expand on this probably better than I can, is really fundamentally creating an access layer which banks can integrate to effectively once.
Yes.
But through that pipe can allow you to solve the initial problem they have, and they do differ slightly by bank. And in essence, iterate on the new problems they've got. In working with we're working with a number of very large US banks, one of which I know very well. And even I am quite astonished by the new things we're finding to solve with them as we go through the onboarding process.
Yeah.
So the how part has complications, but at its base level, it's a very straightforward process, isn't it? I mean,
yeah, and probably the interesting thing, as Mike alludes to, is not the solution itself, which to some extent writes itself. It's how we're getting there. And as he says, we came into this with very strong views and a solution in our mind, and that's evolving as we go. And that's the most exciting and interesting part about this.
Yes.
This sounds a bit cliched, but we really are in a process of co-creation with our pilot banks. We do workshops with these banks. They're learning, actually, and anyone who works in a bank will understand this. They are learning as well about their own systems, limitations, and how they work and how they can be improved. We're learning about them, and we're learning about our own solution. And so this is very much kind of co-creation, and I think that's the best part about
and that includes
what we're
the
doing.
vendors too, doesn't it?
Oh, absolutely includes the vendors who actually, and while we're on that topic, it's worth mentioning that we've talked a little bit about the problems the bank side has, or the users of these services have, which is that, no price transparency, etc. But actually, the vendors, the providers of these services have challenges too, and having been they're unable to price in the way they would like. So it's not just that the banks aren't seeing multiple prices, but the vendors that are pricing to them can't price in the way they would like. They're not receiving the information they need from the banks to give the best price.
Okay, far out.
They're not able to show their service offering to its sort of in its best light. So actually, they're working very closely with us too. Not just is this going to be a problem for me now? I'm going to have more competition, but actually, this is an opportunity for me to actually show my wares more effectively and more widely.
Yeah, if you think about it through the lens of 100 currencies, right? And if you've got, let's say the bank has actually taken the step to onboard or integrate with two different vendors,
Yep.
the main incumbent and let's say number two in the market, what really happens even there is a lot of times the banks haven't the downstream services within the payments function to allow even those two vendors to be in competition, so to speak.
Yes.
So they simply allocate currencies. You get one of those vendors around the table with said bank and ourselves, and you look through, that's through the lens of what are we trying to solve for. The vendor wants more wallet share and they'd like more currencies. The bank wants better pricing from more vendors. But when you get down to the fundamentals of how you do that, that's what Adrian was alluding to. These workshops throw up all sorts of interesting ideas.
Yeah.
Because you've actually brought two parties together, sometimes for the first time, to discuss the actual essence of what they're trying to solve for, which isn't just the best price. There's some, delivery aspects. There are some, what the banks would refer to as straight-through processing, which is effectively automation. These are all things they're trying to solve for. And this is what I was saying. Once you bring the parties around one platform and you begin to solve for more than one of the participants, you actually solve for the ecosystem.
Indeed.
And that's what we see happening.
Indeed.
We've actually had major players in this space, major vendors in this space, attend a workshop with us and a major US bank and come away saying to us, we have never had a conversation like that with our client.
Yeah.
And
incredibly.
this is the opportunity that bringing everyone together creates.
That's it. Yeah. And look, I mean, I've always been very focused on the B2B space because I think you're able to find problems that you can solve that are then really, really sticky. And so I think it's fantastic that you're bringing multiple different stakeholders together, and you will, I'm sure, continue to keep finding opportunities.
Absolutely.
That all parties can benefit from. One question from me now is, you've discussed the fact that you're building the marketplace. Do you guys have any sort of tech team that works with you? Are you following a sort of a no-code approach? Tell us more about how you're building this solution.
So let me take you back a bit. When we launched the business, we realized that in describing things to people, you only go so far. You have to show things to people. So we took the step to work with what I'll refer to as a very well-established trading technology company who could, in essence, white label or put a front screen on some existing technology.
Yes.
And through that mechanism and working with the vendors who wanted to work with us, we were able very quickly to show the banking constituents what good would look like in the future. And that was an important first step for us. We do, looking back, we could see the cost of that in terms of money spent, but the benefit of it was huge. Since then, we've pivoted to bringing effectively our own tech in-house. We have people who work for us in designing and running that program, and we have tech resource. I guess the phrase is near shore of the UK. Which is a model most people follow, frankly. But I think the important point about that is, again, the tech isn't cold fusion invention, some idea. It's not that. It's the tech that banks already are comfortable with and can work with, and the tech that our vendors have been working with. That would be the essence of it, would you not say?
Yeah. I mean, trading platforms are pretty commoditized now.
They are.
And but what we do isn't just a trading platform.
No.
One of the reasons this hasn't been done before is that this combination of FX trading and third-party deliverable payments does have its challenges. So there's nothing off the shelf that will actually produce what Mike says, which is what good looks like in this space. So there's certainly a lot of dev work being done, but it is taking wherever we can existing, battle-hardened trading technology and adapting it.
Indeed, fantastic.
Yeah.
And I think that initial approach, where you used, let's say, a white-labeled solution, and then you decided to build it out. It shows the beauty of the fintech market.
100%,
It allows you to test out a hypothesis and then go to market and then invest in your dev team. So.
Well, what it also allowed us to do was, going back to what Adrian was alluding to before in terms of the workshop space, when you show, if you go back to what a bank looks like, you've got a trading community, you have the channel, which is the payment function, you have the supervisory function, which is the guys dealing with regulators, compliance, and so on. There's various constituents in a bank that are in essence consuming what you deliver. When you show those various constituents what you've got, when you show them what good would look like, you get two reactions. First is, wow, never seen this before, isn't this excellent, which is incredible. But the second reaction is questions. Well, then, if that's there, how would this work? Which is beautiful. It's what you want. It's absolutely golden when you can open up a conversation and in that workshop, showing your solution, come away with 5 or 6 new ideas or new things to solve for.
Yes.
Because ultimately, when you think about the stickiness of a platform in any institution, it's solving for those underlying issues and embedding them in the platform such that the workflows in the institution are now part of that function.
Yeah.
That's important in the B2B space.
Yeah, no, absolutely. And, I think that's where, B2B companies have the opportunity to then create new services and cross-sell. And,
absolutely.
When you think about your average revenue per unit, let's say in this occasion, a unit is a bank, you're able to add products or services to address these challenges one by one, and that's how you can grow the ticket size and ultimately deliver on what the investors are looking for, because you've solved the problem you set out to solve, you've found additional problems to solve, and then that's what VCs look for.
Yeah, and we're going to get to the VC. We'll talk probably a bit more later about raising money and what we've learned so far. But it is fascinating when you deal with VCs who have some sort of pattern recognition in this space and the questions they ask in exactly that particular lens, which is how do you get the bank to, if the unit is the bank, how do you get the bank to work with you and in essence function with you? You hear lots of war stories from different VCs where they've backed businesses that haven't been able to achieve that. So they're running scared with, really, you work with banks? How do you do that? That's risky for us.
Yeah.
And in this particular round, we've certainly had lots of conversations with VCs who we love the idea. We think the founder team is amazing founder market fit as opposed to product fit. But we are worried that you aren't going to be able to achieve that integration with large institutions like banks. Let's wait one more round.
Yes.
So we see if you can get that done, because it's these questions that, quite rightly, they want to solve for. And, the guys that have backed us, perhaps have had the vision to see that we can solve for these things.
Both of you are in a almost unique position in terms of having come out of the banking world. You've got, quite a few years of know-how. You both look pretty young, but, I won't ask what your combined, years in the banking space were. But I think that adds a lot of, let's say weight towards working towards that milestone that the investors are looking for of, actually gaining traction with a bank.
I think so. I mean, Adrian, you and I spoke about this. I think it's really interesting, the reaction to you and I from the VC community around our relative experience or ages. And it's a double-edged sword. We certainly have those who say, wow, it's clear that you have the experience / maturity. You've got some scars in terms of what you used to do, and that will apply well to what you're trying to do. Then you have those that go, but you've never done this before, and you aren't the profile we would normally work with. In fact, we had very early on, do you recall that conversation with that one VC who said, we won't be able to shape you the way we shape our normal audiences? And we were like, well, of course there's always going to be some shape, but not the way you perhaps think. Would you say?
Yeah, no, that was funny. And in fact, that was actually feedback initially given not to us, but to someone who introduced us to them.
Yeah.
Ultimately, we got that feedback from them, but initially this feedback was given to somebody else, which was exactly that. Well, they won't be very malleable, these guys. They've got strong opinions and they'll think that they know better. Yeah. And so it is a double-edged sword.
Yeah.
And we do.
we do. I think that's true. I think the partners that we've chosen to work with from the investment space have recognized that we certainly need help. If anybody who comes into these environments who doesn't think they know, they have all the answers, is frankly, foolish.
Yeah.
But so we certainly have worked with partners who recognize we need help, but we probably don't need that much help when it comes to the actual practitioner end of working into the banking environment and the vendor environment, because we've done that for collectively 30 years. So we know that really well.
Yeah.
We need help in other areas, and we can get to that. But ultimately, it's working with partners who are able to, and this is perhaps important for the VC community, to recognize when to hold hands and when to let go.
Yes.
And I think we were very cautious in, look, when you're taking money, sometimes beggars can't be choosers, especially in this market. But even in that environment, we've been very cautious at saying, hang on, what is the approach that we want from our partners in this sense, in terms of how we work together? Do we want someone who's looking over our shoulder every day and questioning every move, or do we want somebody who's there saying, look, when you need help, here are the areas I can help you with. When you need help here, reach out, make sure that don't leave me behind.
I mean, you mentioned that it's a difficult fundraising environment. It certainly has been relative to a few years ago with very low interest rates, very high valuations. In the current market, what are VCs looking for?
Wow.
Well, we obviously were watching the news and reading the trade press like everybody else, and we were watching this, the market slump, if you want to call it that, develop. We felt all along we were never rattled by it. We accept that valuations aren't what they were, but that isn't why we started this business, to have crazy valuations that we couldn't really justify, particularly if something didn't quite go to plan. So that was fine for us. But what we sort of sensed in this market was that, to state two obvious things, the VC firms are still sitting on capital that they need to deploy, and they want to deploy. Yeah. And the second thing, what was changing, apart from valuations, was that perhaps what they weren't going to start taking anymore was sort of Hail Marys, truly blue sky, what if type bets, and with no real plan to make money, no real clear solution, just the possibility that millions of people might use some product one day.
Yes.
And so what we felt was that we would have good VCs with capital to deploy, looking for real businesses solving real problems with real paths to sustainability, and that's what we feel we are. So we were quite confident in this market that we would raise money, and we are, I think, as Mike mentioned earlier, just closing our seed round now. Fantastic. We closed a pre-seed round 18 months ago, maybe just over. So we never lost confidence in our ability to close the round, and one of the things I think Mike and I are fairly good at is being able to take some of the emotion out of these situations. Yeah. So we didn't ever sit around thinking, oh, well, if this was 5 years ago, the valuation would be, something crazy. Yeah. We generally we roll with the punches fairly effectively. Yes. So we've kept our eyes on the prize, and we're raising.
Yeah, and that may be a function perhaps of the maturity we were referring to before, again, being older dogs. Yeah. Perhaps what's the new trick anyway? Perhaps this is the old trick reinvented. But ultimately, I think in going through the pre-seed round, the feedback we got from many people, well, that would be the hardest round. What's hardest in relative terms? We discovered that it wasn't true. Our pre-seed round was in fact quite straightforward because the market was in a different place. As Adrian said too, the VCs are still and were then looking for great businesses that made sense and were solving real problems. Yes. Rather than a solution looking for a problem. We already had the problem because and we have a solution for it. Yeah. So we went through that phase. That was pretty good, and we were backed by two really good US-based, New York-based VCs actually, who recognized what we were doing, saw the pattern, and have been great partners. The only change I think between that phase and this phase was in recognition of watching the news, the trade press, as Adrian alluded to. Let's just start the seed round earlier than we expected to. In the event, that's been a good thing, because ultimately what the market looks like now to me, the same players looking for the same good deals without the froth of crazy valuations, and as a consequence, people looking at this and saying, well, hang on, is this really where I should be? So there's less of that FOMO factor, which of course most rounds have got. And so in that context, I think there's really been a learning curve, and we keep referring to this as our rodeo. Perhaps this is rodeo 1.5 for us now, I don't know. But ultimately, learning as we go and working with people. We have some great advisors. I mean, I won't get into who they are, but they've given us astonishing advice and help on how to approach this. But I think Adrian's right. I think being able to let something be what it actually is rather than making it into a new story. Yeah. A no is never a no permanently, and a yes is never a yes permanently. And ultimately, learning that we have to go through a lot of conversations, explain ourselves in probably 50 different ways until you get until you get that person who goes, okay, I like the idea, I like you, and I can see where you're going with this. Yeah. And in that lens, you then get where you want to get to. And we've achieved that. In this seed round, I won't mention who they are, but in the seed round, we have an incredibly good lead for this round. We will be closing in 2 or 3 weeks with them. Yeah. Our existing lead for the first round is following on, which is great. In fact, taking more. And we have a really good, which I also can't mention, a banking partner who's investing with us. Fantastic. Which is fantastic as well. And so the strategic path we wanted to follow for this particular round has been exactly as we intended, which there were points along the way where you questioned that and said, well, will we really get there? And I think we all understand in life that the more flexible you can be within a range of outcomes, the more likely you are to be successful in your own mind. We have always had that approach. Flexibility, a man can have, or a lady can have whatever she wants in life as long as they're flexible. It's a cliche, but it's true, right? That's true of raising money as well. And I think we've seen that in this round. And as I said before, we're thrilled by the outcome we've got to. It gives us, in essence, at least an 18, 24, perhaps even longer runway on where we need to get to. And so the roadmap of deliverables in this year and into next and the year after that is very clear to us.
Yes.
And we now have the backing to achieve that, which is fantastic.
Fantastic, yeah. And look, I mean, I think, you mentioned flexibility, but one thing that I've gotten from both of you, is, I guess, you've had your eyes on what the goal is and you've persistently just kept going and working towards that, regardless of what the sort of the market state is. You're focused on the problem, and I think persistently focusing on that and highlighting that to stakeholders will result in the optimization of the ecosystem, hopefully through your product.
I agree. I love an analogy, which Adrian, of course, teases me about. But if you look at, the Football World Cup, the Rugby World Cup's coming up, you can lose a pool game. It doesn't mean you can't get out of the pool. It doesn't mean that you can't win the thing eventually. So it's being able to roll with the punches, let the thing be the thing that it is, not something else. Reset. It's a cliche. Reset. Tomorrow's another day. I've had days on this round where I've had 3 or 4 pretty bad knockbacks in one day, and you sit back and you take a deep breath and you perhaps go and have a chat with your partner, and maybe open a beer, who knows, but tomorrow you're back in the saddle and you're getting it done.
That's it. Fantastic. Look, we've covered a lot in terms of both of your careers. We've talked about AbbeyCross and the problems that you're solving, how you're solving it, the fact that you started off with, a sort of fintech partner, and now you're doing the development work yourselves. Some really key learnings in terms of raising money, and just being persistent about that. I want to check whether, when it comes to AbbeyCross, there's anything else that you'd like to discuss before we move on to more sort of personal takeaways.
I think, for me, there is one thing that we haven't perhaps quite mentioned. One of the things that excites us most about this is that we started this journey really influenced by the book, The Platform Revolution, and just the sheer possibilities that platforms offer. And Mike used the word coalesce earlier. It's one way we describe this. We see the industry coalescing around this platform because there's been nowhere to go to date. We've also used the phrase centre of gravity. We want this to become the centre of gravity for payments to emerging markets to begin with, but payments more generally. But what's so exciting about that is it becomes a place where others can play as well. This doesn't have to be just about AbbeyCross. It doesn't have to be just about us or any individual bank or payment company. But there's a whole lot of services that can be provided into this ecosystem that aren't necessarily businesses we're even involved in, but just creating a place where people can play and seeing what comes of that. I think that's one of the things that excites us most.
And I would add to that, when people see this, reach out to us, hit us up, man. We'd love to hear what your thoughts are in this particular area, because we don't think we have all the answers. In fact, I know we don't. And so in that sense, it's that center where people are looking for the next challenge in their lives, or are excited about what we're trying to do. In any sense of it, want to support it, want to have a conversation. It doesn't matter. We'd love to hear from you. And so we've got, a lot of momentum, but you can never have enough of that. So
Indeed. Yeah, fantastic. Well, thank you so much for highlighting that. I think one final question from me, because I was, reflecting on how we've spoken a lot about banks, and, you guys worked with a lot of banks. And so I suppose you knew that area of the market. When it comes to the vendors, how have you sort of mapped those out in order to see who you want on that side of the marketplace?
So this is a long answer, and so perhaps we just give you a sense of how we think about that, and we can build on it together, right? So yes, there's an incumbent, runs a great business. They've been around a long time. We know them personally. We've worked with them personally, and we think we love those guys. They think that we're awesome, and I totally don't have an issue that they don't want to necessarily work with us right now, because they don't. I don't blame them for that. And I think when the circumstances are right for them and for everybody else, it'll happen. The others, the challengers, as Adrian referred to, who we already are working with, who frankly bit our arm off to do this, and us theirs, are already on the platform. Those vendors are high quality vendors too, and they give banks an alternative in many levels, not just pricing. There's also service levels. When you deliver a payment, it's not just the price, it's also does the payment actually get there on time, and is the data in place to let you track it. Those are things like that are important. So we've gone after the vendors that banks initially want to work with. But we also see a world where, because this is not just for banks, it's for payment companies and for NGOs, there should be, in the curation sense, really, something for everybody, don't you think?
Yeah, that's really important to us. And particularly to get something like this off the ground, you do have to curate the market. You have to curate the initial sort of critical mass of providers.
Yes.
And we want, as Mike says, we want there to be someone for everyone on this platform. So there are vendors out there that do great things, but perhaps because of their balance sheets or perhaps because of any number of reasons, they're never going to be able to be onboarded by and traded with a major global bank.
Yes.
By the same token, there's plenty of people who might want to use our platform that aren't major global banks, who will be happy to trade with them. And so this doesn't work if we've got people on this platform pricing and no one is trading with them. Yeah. This doesn't work if we've got people on this platform trying to make payments and no one will accept them. Yes. So yeah, there is a real, very deliberate and intentional process of curating what we're doing.
And I think, Adrian, the way you described that last piece is a great segue to something we said earlier around our personal philosophy and how really understanding, having deep domain knowledge on the problem that you're solving really matters in these situations. Why perhaps it's harder for a really smart person coming out of a great college to take on a task like this.
Yeah,
I think you kind of have to have, dare I say it, the years in the trenches that we've got to understand this.
Yes.
That you are solving for a number of constituents. There's a solution that they all get, that they all can win from. And that requires a level of thinking, and you still have to work out how you start the process.
Yeah.
Because if you go to a dance and there's only one person on the dance floor, and that person might be the crazy person that always dances on their own.
Yeah.
Generally speaking, it's going to be better when there's 50 or 100 people dancing. But how do you start it off?
Yes.
We spoke about filling the dance floor, didn't we?
Yeah. Filling the dance floor is one of the analogies we use.
Yeah. Fantastic. No, very good. Look, I think, in some ways it kind of reminds me of, the Revolut story. Nick Storonsky was working as an FX trader and he was like, when I go on holiday, why am I paying 5% more than, what I can see with the interbank rate? And so he set out to solve the problem. You guys have seen this problem day in, day out for years, and you're working on solving it. So it's fantastic. Just before we wrap up, it'd be great to hear from each of you just a couple of key takeaways. This doesn't necessarily have to be about AbbeyCross. It can be personal as well, but what key takeaways or pieces of advice would you give to founders and operators in this space?
To use that horrible cliche, it is an incredibly steep learning curve. And we know so much more now about fundraising, for example, than we did when we started this journey where we knew literally nothing.
Yeah.
And that's been one of the best things about doing this. So a couple of things would be, we went into this kind of deeply impressed by VCs.
Yeah.
And thinking these guys had deep, as Mike said earlier, deep expertise in every aspect of fintech.
Yeah.
And what we found out is that they are good at what they do, but in a very different way. And so the guys that are going to lead our seed round said to us, we do capital. And it was really great to hear that in some respects, because it enabled us to relax into what we're doing, knowing that we had really fantastic, high quality partners who understood the capital raising process, not just this round that they're going to lead, but to guide us going forward. As our lead, by the way, from our first round has done this round. So sort of that meant, but where that really played out for us was the first pitch deck we developed.
I'm laughing because it was historically long.
It was massively too detailed. We were trying to explain in great detail stuff to people who just weren't interested or able to consume the information at the level we tried to deliver it. And
the curse of knowledge.
Yeah, it's the curse of knowledge. We really weren't getting very far.
Yeah.
And one day we're on the phone to each other and just sort of almost at the spur of the moment decided to just junk that deck and start again and develop one that was only half the length.
Yeah.
And that was the turning point for us in that
Absolutely.
round. That changed everything.
Nice.
And the second thing is just to encourage people out there who, the idea of the fintech founder is some 24-year-old who's just come out of university and is now off to Y Combinator, and there's nothing, and is living on pot noodles, and there's nothing wrong with that. That's fantastic. But there are problems with that model, and this is one of the reasons we don't like disruption, because often those guys are talking about disrupting something they don't understand.
Yeah.
And they're not really disrupting anything at all.
Yeah.
At best, they're reinventing the wheels. Very, very occasionally, something is truly disruptive. And so really, it would just be to encourage people who are mid-career or even late career, who have deep domain expertise, can see a problem, understand what the solution is, and sort of have the experience to actually execute. And obviously, execution is everything.
Indeed.
I just encourage people to sort of just to jump in and have a go themselves and understand that the fintech isn't just about youth. Fintech is about real solutions to real problems.
Indeed.
Yeah, and those people who do that, they're still going to learn a whole lot of new stuff, which is certainly we know that. We're learning things all the time, and ultimately, I think have the courage to have a go.
Yeah.
Don't sit at your desk and complain about the environment you're in if you're never going to have a go at it.
Yeah.
So you certainly can do that, but accept that it's going to be very different, and have the humility to go with that.
Yes.
I think, God, there's so many learnings. I mean, it's been a lot. I feel when I look back now in the 2+ years that I've been doing this, I'm astonished at what I've learned in that period. I was a managing director at a bank. I ran an amazing business at Bank of America, which I had a great team around me. We grew an incredible business. But even since then, it's been really astonishing. I think my takeaway really that I'd like to offer in the same space as the encouragement element that Adrian mentioned is that we are fostering a culture, and it's important to the both of us. When we started this business, we said, how do we want to run this business? What have we learned in our careers that we don't want to replicate because it was, frankly, not that great, and that we'd like to change things? And so our environment really is one of have a go at it. And we work hard to remove the word success or failure, right or wrong from the conversation. And we want around us people who are having a go at solving the problems and aren't worried when the thing they thought would work doesn't work. We have far more examples of things we've tried so far, even knowing the answer, that aren't going to work.
Yeah.
And we have loads of examples of things that have emerged that are in fact better and are going to work. Or might not. We don't know. We'll see. And that's fine. We want a culture, and we foster the culture where ultimately remove the judgment and just be aware that there's a whole bunch of possibilities out there. And if you're flexible enough, you're going to come up with a solution that actually works for us all.
Yep.
And as Adrian said, not disrupt, but literally optimize something. Okay, can it be more effective? And if we're looking at it through the lens of how do we make this, whatever this is, in that environment, that context, more effective, and there's always something that can make it more effective. You go that way, and I think that's how we've gone with this. So I guess my takeaway is just like Adrian, have a go at it. If you're interested in an environment, if this sounds like a place where you think, wow, my ideas, my approach to life can thrive, chat to us, because ultimately we think we are building something pretty special. The guys backing us have seen it. The banks working with us already have seen it. The whole bell curve of adoption and who does what when is true. We've got the people working with us have seen early stage promise, and they have the courage themselves to work with us, which is amazing. We're so thankful for that, because we need that. You don't curate anything without starting with somebody.
Yeah.
So we see that, and so we've tried to foster a culture with our partners. That's the investment partners, the banks we work with, the vendors, of this collaboration and possibility, and that's what we're about.
Excellent. Well, look, gentlemen, thank you so much for talking through AbbeyCross and your own journeys today. Good luck with the seed round, and we look forward to following your progress, and potentially having you back later on to hear what's been done.
Absolutely. Well, thank you.
Thanks, Lucas.
Yeah, thanks, Lucas. Thanks very much for the opportunity to do this, and it's great talking to somebody who's put this together, and it's good just to chat about it. Very relaxed. Really enjoyed it.
Yeah, no, thank you. I think it's super important for the community to hear what ideas are out there, and to hear it from from the two of you, as opposed to through an article or something like that. It's good for them just to see and hear you guys.
Thanks,
Lucas.
Thank you.
Cheers.